IFRS 5 looks at discontinued operations. It also looks at non-current assets held for sale, but that's not really the focus of what we're looking at here. And a discontinued operation is a separate major line of business or geographical area that a business has either closed or sold or has got as held for sale at the year end. Now, if it's held for sale, it means you're expecting it to go within 12 months, you're committed to a plan to sell, you're setting a reasonable price. And if it's held for sale, you basically put all of the assets for that part of the business in current assets to say they will be gone within 12 months. Now, a discontinued operation is shown as a separate line in the statement of profit or loss, which means that part of the business is not included in revenue, cost of sales, and so on. All of the results are in one line saying profit or loss from discontinued operation. An example of this is the UK company Whitbread that sold the chain of coffee shops Costa Coffee to Coca-Cola in 2019. They bought the chain of coffee shops for 19 million, sold them to Coca-Cola for 3.9 billion, which is a pretty decent deal in anyone's money. And so what they have to do in their accounts is Whitbread will show, here's the results from our business that remains. So all of the hotels and restaurants and pubs that they still have, and then as one line, the results from Costa Coffee. And those results will be the profit or loss for the period, and then any gain or loss on disposal. And that will be disclosed in more detail in the notes to the accounts, so that shareholders and other users can look at it and see, well, why did you sell those coffee shops? What price did you get? What results had it generated for you? And you would actually restate the prior year's accounts so that users can see the discontinued operation for 2 years, the results from both years in addition to the gain on disposal. And really, IFRS 5 is there to give the users a more full understanding of the true picture of the business, so that well-performing or poor-performing parts of the business that will no longer be there are not distorting the underlying performance of the business that's going forward and that will continue.